Carla Lingvar here, CEO of JPMA Financial. I'm sitting here with Mr. George Graziano of Cinto Graziano CPAs. How you doing today, George?
Very good, Carla.
Good.
Nice to be here.
Nice to have you. And we are going to be chatting about the tax consequences and discerning if a short sale may or may not be appropriate for you. So, George, what do real estate owners need to pay attention to when they're considering the short sale process?
There's really four things, Carla. One is there are tax implications of what they're about to do. The second is that the tax rules are generally in their favor in this situation. The third is it's very heavily facts and circumstances based. And the fourth is that they should plan ahead. I'm going to go back to each one of those and talk about them a little bit. There are tax implications. Okay, these are economic transactions. They're usually fairly significant economic transactions. Like any economic transaction, there are tax implications. Doesn't mean that there are bad implications. Just means that there are tax implications. You've got to consider them as part of your decision-making process. In general, the rules are in their favor. This is true. Okay, the rules in this area have been designed for people that are in financial distress, to recognize that they're already in financial distress and not to unduly add a tax burden to them. So this is a very important situation for people to understand. A lot of times they think of the taxes as the boogeyman. In this case, they should not think of it that way. They should recognize that the tax implications might be in their favor. They might be very pleasantly surprised, and not to be afraid of taxes in this situation. The third thing is facts and circumstances. Just because your neighbor, your brother-in-law, or somebody you know went through this process and either got a bad tax result or a good tax result has nothing to do with the result that you're going to get. This is hugely important to recognize. It's only about your specific facts, your specific situation will give you your result. It's heavily driven in that arena. You cannot generalize in this area. The fourth thing is plan ahead. Again, this is a significant economic transaction. Usually the debt is hundreds of thousands of dollars. The assets underlying the debt are hundreds of thousands of dollars. Therefore, the difference between someone with no taxes in this situation and those who are fully taxable in this situation is usually tens of thousands of dollars. Therefore, it's in your financial interest to look at the situation before the final decision is made or before the transaction occurs. That's really the main message today. Spend a few $100s up front to have your situation analyzed, and it may not change your decision, it may not change the ultimate tax result, but knowing where I stand, not regretting later, I wish I would have known that. You don't want to be in that situation. Too many, far too many.
Far too many.
Plan ahead.
Be proactive about it, absolutely. I can't tell you how many times I get the phone call and it's, oh my goodness, gosh, I wish you would have called me before.
Yes.
And based off of all that, and we've been hearing that a lot today in regards to it's your specific situation.
Absolutely.
It's very important to look at all the details based off of what their particular, many different moving parts, obviously.
Yeah, absolutely. Everybody's situation is different, and it is, again, the specific facts, when did you buy the property, how did you get into the property, what was the use of the property, and in your situation, what is your financial situation? Even if you have the same sort of property pattern as someone else, your financial situation can dictate a different tax result. So it's both the facts of the property and the debt, and your own financial situation, and what you use the property for. All of that matters, and it's all very specific.
And that's the same for commercial and residential property, right?
Absolutely, right. There are some rules that are purely for commercial. There are some rules that are purely for residential. In general, all of these answers cover both residential properties, rental properties, commercial properties. This is a comprehensive area of the tax law. All those situations are covered. And most of what I'm saying today covers all of those areas.
So the specific actual tax rules associated with the commercial and residential real estate, not only are they specific to that individual,
Right.
they work similar but a little different.
Right.
Wonderful tax. There's only how many pages to this?
There's a lot, but in some of these areas which we'll talk about, whether it's residential or commercial, you could have the exact same answer. So there are big parts of the tax code in this area that cover both. That cover it's indifferent to whether you say are residential or your primary residence or rental or commercial property. So some of it is broad, but again, you've got to look at the specific facts of each situation.
Wonderful. So if somebody were to think about a short sale process, what's the call to action? What should they do? Call, email?
Well, the first thing I want to just make sure that they understand there are two tax implications in this area. There's cancellation of debt and there's disposition of the property, okay? Because they're selling or disposing of the underlying property. It's a whole separate transaction, and they have cancellation of debt potentially on the fact that the fair market value of the property was lower than the debt. They're two distinct transactions. They both have their own tax implications. Cancellation of debt is the one I want to make sure I leave people with today. There are big exceptions in the code for people not to pay tax on those. Bankruptcy is one. Insolvency is another. Insolvency is the key. That's the key in this area. Finding out if you are insolvent under the tax code in this area could save you thousands of dollars in taxes. Business debt is another exception. Farm property is another exception. Primary residence debt is another exception. So the exceptions are broad. They cover a wide area. They cover lots of people, lots of situations. Again, the taxes, you might be pleasantly surprised what your tax result is in this area. If you're in this situation, you need to have one of these analyses done. They can call our office. They can email us. They really need to find someone in the tax arena, TPA, other tax professional, who's really looked into this area, understands this area. They must be knowledgeable, specific in this area to get the proper answers.
Yeah, and I can't stress that enough, because many times not only do you get the call too late, but maybe sometimes the call's not made at all. And that creates even a more challenging situation. So,
Absolutely.
Well, thanks so much for being with us today,
Thanks for having me.
George. And I look forward to speaking with you soon.